Stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in the laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Vinus?
Well, at Vinus, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Vinus is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like the Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Paramount or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world. And I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of...
Profits will help. Yes. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that these are conversations that a number of regulators and cities have wanted to have with us for many years. And I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
mean to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
And so within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also...
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
You had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking in some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Yes, indeed. Live from my home in New Jersey, streaming on YouTube. It is Monday, November 23rd, 2020. And it's another Monday. You know, you would have thought it might have been sleepy as it's a holiday week, but it's a holiday week like no other. We've got some vaccine news. We've got the shaping of a new presidential cabinet, I should say. And we've got the equity market continuing to move higher. So some optimism. It's out there, if not completely comfortable. So we're going to dig into that over the next 4 hours. Let's get you going, though, on this Monday with a check on the trading day. Here is Charlie Powell.
Hi, thank you very much. Happy Monday to you, Carol Masser. Let's begin with AstraZeneca making news this morning with its vaccine down 1.5% right now among some of the other vaccine names. Pfizer down 1%. Moderna is up now by 3.7%. The Dow, the S&P, NASDAQ, they're all advancing. Stocks churning higher as investors pile into companies that will benefit most from a return to normal economic activity. S&P up 13, up by 0.4%. The Dow's advancing 261, up 0.9%. NASDAQ up 14, up by 0.1%. But the NASDAQ 100 index, it is down now by 0.1%. 10-year down 7/30 seconds. 10-year yield 0.84%. Gold down 1.7%. $18.38 the ounce. That is a drop of $32 the ounce, and a surge for crude oil up 56 cents a barrel. $42.98 on West Texas Intermediate crude, up now by 1.3%. Recapping stocks higher. S&P up 12, up by 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Charlie, thank you so much. You're listening to Bloomberg Business Week. Let's set the Business Week agenda. Here to do that is Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence. She's on the phone in New Jersey, along with Dave Wilson, Stocks Editor at Bloomberg News. He's on the remote access from New Jersey. Gina, let's kick it off with you. It does feel like investors being a little bit more optimistic on this Monday once again.
Yeah, and I think that if you look at the technicals of the market, we got to the point where extreme breadth conditions had emerged over the course of the last week, but not extreme momentum conditions. And that kind of combination usually means if you're going to have a consolidation or a sell-off of any description, it's likely to be relatively short. We just haven't seen that huge blow higher, that huge surge up, despite the fact that we did have a pretty good election week rally and post-election week rally. It just didn't get to the point where we were overbought. And as a result, we had a pretty modest consolidation, and now it looks like we're moving higher again. And once again, led by value-oriented sectors as the market sort of sheds its defensive nature that really dominated the market returns, at least until this fall.
That's a good thing in your view, Gina?
Yeah, it is a good thing. I think a market that's led by cyclicals as opposed to defensives is generally a market that's most likely to endure its gains. I mean, unfortunately, the reality of COVID was very, very few companies in the S&P 500 were able to participate in any kind of earnings growth or post any kind of earnings growth, at least through the second quarter earnings season, except for the big cap tech companies, some of the more defensive companies, and healthcare stocks. And what we're likely to see going into 2021 is a much more well-distributed earnings environment, which suggests that the market gains should be on sounder footing. And I think we're starting to see investors rotate into those themes and that story of a broadening recovery. Even if it's a slow recovery, it still is recovery, and acceptance that that recovery should drive a better risk tolerance going into the year ahead.
Yeah, it's definitely a different day, and I know Charlie broke it down. Zoom is down a little bit, but Macy's is rallying as there's some optimism about maybe we are getting closer and closer to normal. Dave Wilson, come on in on the trade today and what you're seeing.
Yeah, I mean, you can start with Macy's and look more broadly across retailing, and it's having a pretty good day. I mean, especially Gap, which is up almost 8%. JP Morgan raised their rating, recommended buying the stock for the first time in more than 6 years, which doesn't hurt, but it does look like a broader move at this point. And really, I mean, if you go through the 11 main industry groups in the S&P 500, it's all about those economically sensitive areas of the market. You have energy stocks taking off again. You know, the S&P 500 energy index up more than 5% at the moment. Then you go down the line, you look financial companies, industrial companies, raw material producers. I mean, certainly consistent with what we've been seeing lately, not so consistent with what we've seen over time. And I should point out as well, I mean, what's happening with the smaller companies. The Russell 2000 index is up almost 2%, and it's basically playing catch up to the S&P 500 for the year. And at one point, you know, I was running the numbers a little while ago, it was behind by 16 percentage points.
Right.
That's how much it's caught up. I mean, it was almost down that far in relative terms at the beginning of September when we saw the S&P 500 peak. And since then, it's been a real reversal, you know, so it's, you know, the more value-oriented, cyclical areas of the market. On top of that, the smaller companies, and they're leading the way today.
Yeah, kind of interesting in terms of the trade. Hey, Gina, you know, what comfort do you feel like in terms of figuring out kind of where we are in this economic cycle and ultimately what it means for then the market cycle?
Yeah, I mean, I think that you can't have periods of time where the economic cycle and the market cycle sort of detach, but it does feel pretty clear to me that we are well into recovery at this point in the game. I mean, the economy does appear to have bottomed within the second quarter. We're starting to move off of that bottom in the economy. Markets always lead economic growth. They always lead earnings growth. And so the market has told you that we're going to get economic recovery over the course of the next 12 months. It's just a matter of the strength of that economic recovery and where it comes from that I think is really up for grabs. But if you look at the broad market cycle, you know, I think you could characterize the markets as moving from outright depression to hope right now. We're certainly nowhere near optimism or exuberance that usually characterizes massive tops at the end of an economic cycle. We're closer to moving out of that recession low toward recovery. And I think from a sentiment perspective, it really now is about acceptance of recovery. I mean, it's been pretty clear that we're in recovery now for 6 months, but investors really weren't accepting the degree of that recovery But we have started to move into a new realm, and I think that's exhibited most clearly by the outperformance of highly levered entities more than anything else, is the fear of bankruptcy risk has really diminished substantially since Pfizer's initial vaccine announcement and continues to diminish as we get more and more confident that a vaccine is imminent. Nobody knows exactly when it's coming,
right?
But we do know it is coming sometime within the next year, and that's giving investors a degree of confidence we hadn't had.
Yeah, I do feel like that there's finally some visibility, right? We went from this period of with everybody working on vaccines, but really no real news, and then all of a sudden we've had, here we are, like kind of our third Monday in a row where there's some new development, and that is certainly giving, Gina, investors hope here.
Yeah, I totally agree, and that's a big character change for the market, right? I mean, it's, to not have that certainty or to feel that certainty was definitely one of the factors that kept defensive sorts of investments moving higher. Liquidity from the Fed helped a lot, but all that liquidity really went into a concentrated group of names where investors felt confident they could weather any massive economic storm. Now we're getting a little bit more certainty. We're starting to accept the fact that we are going to move into recovery. We don't know the pace. We don't know when or how fast it's going to be, but we do know it's coming. And that, I think, is driving a degree of risk tolerance that we haven't seen in quite some time.
And Dave Wilson, that might lead to an unprecedented year, which is going to be your upcoming chart of the day, yes?
That's right. It's all about comparing where we are at the end of the year to where we were back in February and March. It's a real contrast.
It definitely is. All right, guys, thank you so much. Really appreciate it. Setting our Business Week agenda, Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence, along with Dave Wilson, Stocks Editor at Bloomberg News. He's going to be back a little bit later on our broadcast. Now, on the virus, we are going to hear from AstraZeneca Executive VP Ru Dauber on that Astra news. Then we're going to talk a little bit about self-testing. We're going to do that with the CEO over at Co-Diagnostics, self-testing for home when it comes to the virus. We're also going to check in once again with Doug Hirsch. He's the co-CEO of GoodRx, and really dig into that Amazon news last week about Amazon getting deeper into the prescription drug delivery business. Susan Line, she is the founder and president of BBG Ventures, former president of ABC Entertainment. So we'll talk about the VC world, how her investments are doing, where she's finding new opportunities. Also talk to her, I kind of want to ask her about Quibi and also Disney's focus on streaming. We're going to talk about White House cabinets, past, present, and future, which includes President-elect Joe Biden's cabinet, and also what is up with the current U.S. Secretary of State Mike Pompeo. It looks like he is planning for his future. And then we're going to talk a little bit about the 2020 year that is not a good one for Prince Andrew of the UK. It's an interesting story in the magazine. All right, first up, let's get a check on your world and national news. For that, it's over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. As you've been discussing, we have another vaccine candidate moving forward. But as Bloomberg's Nathan Hager reports, the preliminary data released on the vaccine from Oxford and AstraZeneca is being met with some skepticism.
AstraZeneca says its shot is 70% effective on average, but it's highlighting one dosing regimen that appears 90% effective. That has SVB Leerink analyst Jeffrey Porges saying the shot will never be licensed in the U.S. He says Astra is trying to embellish the data.
I think those comments are quite harsh.
Ru Dauber is head of AstraZeneca's biopharmaceuticals unit. He tells Bloomberg Radio and Television the company's still gathering 30,000 volunteers for a large-scale U.S. trial.
And I think it's far too early to speculate about how regulators will react on that.
In Washington, I'm Nathan Hager, Bloomberg Radio.
More Republicans are speaking out about President Trump's reluctance to concede the election, with former New Jersey Governor Chris Christie calling out the president's legal efforts on ABC's This Week.
What's happened here is, quite frankly, the conduct of the president's legal team has been a national embarrassment.
Well, President-elect Joe Biden is not waiting to move on his plans. He's expected to announce several cabinet choices this week, likely tomorrow, and they'll largely focus on national security. One pick is said to be Tony Blinken for Secretary of State. He served as Deputy Secretary of State and Deputy National Security Advisor in the Obama administration. We're also hearing Lyle Brainerd, who was mentioned as a possible Treasury Secretary, has been told she needs to stay at the central bank and may follow Jay Powell as Fed chair when his term expires in 2022. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, and joining me right now is our own Charlie Pellet. And Charlie, man, just been trying to keep up with all of these virus stories. This one really worries me. Coronavirus hospitalizations rapidly rising in New York, already straining capacity on Staten Island. We got this from Governor Andrew Cuomo today. But this is what, you and I have talked about this, right? Rising cases lead to more hospitalizations, lead to strains and stresses on our healthcare system.
Indeed. And as we focus on New York City, though, our listeners across the country are saying, hey, this sounds like what is happening in my backyard, in my neighborhood. Indeed, things getting worse on Staten Island, where New York State's going to open an emergency facility on Staten Island. And if you think back to the depths of this crisis, back in March, back in April, when we had that U.S. Navy medical ship that sailed up the Hudson, docking just off of New York City, we had these, it was a private operation, but we had a field hospital essentially open in Central Park to treat overflow cases. You want the trajectory to be heading very much in the other direction. It is not.
Yeah, and listen, I didn't get to this. Our producer, Paul Brennan, we usually do a Bloomberg Business Week Bite of the Day, so I just want to bring it out because his number was 1 million today. More than 1 million people flew through U.S. airports on Friday, the second highest daily total since the pandemic hit, even as officials warned against travel around Thanksgiving. Saturday screenings fell just short of that mark, but were enough to bring the two-day total to 2 million. I mean, this is a concern, right? People flying home, people flying through airports. This is the concern that this becomes Thanksgiving, and it's likely to be another super spreader event.
Indeed, Carol. I like to travel more than the average person, I suspect, but I'm staying home. It just seems painfully obvious. I mean, I was going to go up to Massachusetts to visit my sister. Ain't happening. It's just me and the wife. Even the kids not coming back from New Haven back to New York. It's just the two of us for Thanksgiving. The most depressing Thanksgiving ever. But, you got to stay at home.
Well, you got to do it to stay safe because we've gotten this far into it. And if we can all just hang it out, that vaccine we know is certainly coming our way. All right, Charlie, thank you so much. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, back to work Monday, and we've got a rally underway. Stocks pushing higher as investors pile into companies that will benefit the most from a return to normal economic activity. S&P 500 index is advancing, up now by 12 points, a gain of 0.3%. The Dow is up 245, up by 0.8%. NASDAQ is up 15, a gain of 0.1%. 10-years down 8/30 seconds, 10-year yield 0.85%. Gold down 1.8%, lower by $33 the ounce at $18.38. West Texas Intermediate crude up 1.5% right now, $43.05 for a barrel of WTI. AstraZeneca becoming the latest firm to deliver positive vaccine developments, bolstering demand for cruise line operators and airlines. Right now, looking at AstraZeneca shares, they are trading lower. The ADRs down by 1.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Masser. And a lot of virus headlines certainly coming today. Among them, chief, is certainly the COVID-19 vaccine developed by University of Oxford and AstraZeneca, preventing a majority of people from getting the disease, but falling short of the bar set by Pfizer and Moderna. This is all happening as global cases pass 58.7 million, deaths topping 1.39 million. Working, though, to help in managing COVID is Dwight Egan, chairman, CEO, and co-founder of Utah-based Co-Diagnostics. They make diagnostic tests, including one that detects influenza A and B, as well as COVID-19, also another coronavirus test. Dwight joining us on the phone from Salt Lake City, Utah. Dwight, nice to have you here with us. I got to ask you quickly, though, first, let's start with Utah. I have a niece there. She's a doctor. It's been pretty tough.
It is, and Utah happens to be one of those states which is experiencing a very large increase in current COVID cases.
So when you look at what's happening and you see, again, this second, third wave that we're seeing globally, and the role that you guys can play, talk to us a little bit about your diagnostic tests and how that is going.
Carol, first of all, I would say that the problem that we think some of the states are having is a lack of protocols that are in place to deal with businesses and to deal with schools, for example. Mm-hmm. It's not enough to just tell people to be preventative. In other words, to wash your hands a lot, wear a mask, and socially distance. You actually have to have a protocol. And I think you're seeing more success in places where they actually have a testing protocol. You don't have to test everybody all the time, but you have to test enough of a scientific random probability sampling that you can spot where it's showing up. For instance, in our own business here at Co-Diagnostics, we test our lab 3 times a week and every other employee at least every other week. And that makes it so we have a COVID-safe workspace, and our employees know their COVID status from day to day. And I think that's one of the places where the states have fallen down, is not being able to have those types of protocols firmly established so that a business knows what they're supposed to do to be safe, and a school knows what they're supposed to do to be safe. Now, with respect to our testing, we have developed a COVID test that was our original test offering, which we still sell a lot of. Mm-hmm. We also have done a COVID-2 test, which we sell internationally in places that are more influenced by the World Health Organization and their recommendations in terms of multiple genes. And then our most recent iteration is an ABC test, as we stylize it, which tests for flu A, flu B, and COVID-19. And the reason we did that is that we're entering now a cold and flu season with potentially 100 million cases of flu-like symptoms here just in the United States. And of course, in the course of a year, the United States has about 1 billion colds. And all of these, the COVID, the flu, and the colds, present with similar symptoms, especially in the early going of the disease. So this test is meant to make it so you can tell a patient you do or do not have COVID-19, you do or do not have flu A or B, or you may have both of them, and so on. So we're doing that kind of a test in order to make it so we can have more differentiation between the different types of diseases that present with similar symptoms.
Hey, remind us, Dwight, in terms of how many people are accessing? Give me an idea if you have, in terms of distribution of your test, if that's ramped up in terms of demand, and remind us of what the cost is and kind of the timeline and the accuracy of your testing.
Yeah, so, we were the first U.S.-based company to have a CE mark test for COVID. As a result, a lot of our distribution is overseas. We service over 50 countries around the world with COVID testing. We also have a plant in India, which is the second largest hotspot in the world, where we actually manufacture in India. We service well over half of these states in the United States. And our model is a CLIA lab model, Carol. We're not a CLIA lab, so we don't actually perform the tests at any of our facilities. We actually make the tests and sell them to CLIA labs around the world and around the United States, who then do their own testing. So we don't really even have control over the final pricing that those CLIA labs ask for. Our tests historically have been compassionately priced since the get-go. And that means, we're selling tests for, $6, $7, $8 to our customers, who they then put into their order flow and their workflow. And, they have to do the collecting of the sample and doing the PCR test and everything associated with it.
Right.
But, our whole history as a company deals with tests that are like tuberculosis and malaria. And we do that all around the world. And
what I'm curious, Dwight, too, and as you said, that what's lacking right now is some of the protocols in states to kind of have a testing plan in place that can give people some confidence in terms of safety and who's got the virus, who doesn't have it, how frequent is it. Just got about 45 seconds left here. What kind of demand have you seen for your tests? I'm just trying to get an idea if it's been ramping up in the last couple of months.
We have very strong demand for our tests, Carol. We have since we started selling them. We have a very robust business in our original COVID test. We're now taking orders all over the world with our ABC test. And so we think even with vaccination around the corner, and we don't resist that, of course, as long as you've got cold and the flu, you're going to have to figure out whether people have COVID or not, even if they're vaccinated.
Right. You're going to still need to do this to have an idea of exactly what we're all dealing with. Dwight, we're running out of time. I appreciate it. I hope we can get you back here real soon to talk a little bit more about what you guys are doing. Dwight Egan, he's Chief Executive Officer and co-founder of Utah-based Co-Diagnostics. They do make diagnostic tests, and as you just heard, with flu A and B, as well as COVID-19, and certainly in the thick of all of this. You are listening to Bloomberg Business Week. I'm Carol Masser, and this is Bloomberg Radio. Be sure to check out our latest Business Week Extra podcast featuring Mattel President and COO Richard Dixon on how the pandemic has reinforced the importance of playtime for families. Download it now at Bloomberg.com or wherever you get your podcasts. It is 2:29 on Wall Street. That means it's time for Drive Time Traffic. We do it every 15 minutes right here on Bloomberg Radio. All right, Ed Kalegi, Cross Bronx Expressway. What are you seeing?
Well, Carol, there's an accident on the Cross Bronx southbound after 3rd Avenue. It's in the center lane, and it causes a delay now that reaches back about 45 minutes to the Bruckner interchange. An accident not too far away from that over on the Deegan, northbound at Yankee Stadium. That one also in the center lane. This has delays of about 20 minutes or so from the RFK Bridge. Southbound quite slow headed down the Deegan from as early as Fordham Road. In Manhattan, the west side, the better side, because the east side's a mess in spots both ways. On the FDR 30s to the RFK Bridge to Queens, we're on the Cross Island Parkway word of an accident southbound at Linden Boulevard. The right lane is blocked there, and that is a delay. Time's out at about 15 minutes in the area of Hillside Avenue. Still no delays at the Lincoln Tunnel, no delays at the Holland Tunnel, no delays and no construction that can be seen over at the George Washington Bridge, which is good news. Up in Westchester, the ride thus far on the Sawmill and Springbrook are okay. 95 to Connecticut. So far, so good. The Bloomberg 11:30 3-day weather. For the rest of today, partly sunny, breezy. Temperatures continuing to fall. Tonight, clear, low 35 to 40. Tuesday, sunny and breezy, high 45 to 50. Wednesday, cloudy, high 50 to 55. Right now in Central Park, partly sunny and 52 degrees. With the best ride in and out of the city, I'm Ed Kalegi, and this is Bloomberg 11:30. Bloomberg Business Week continues.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, you are listening to Bloomberg Business Week. I'm Carol Massar. Another Monday and another round of COVID-19 vaccine developments. Today, though, we're all about AstraZeneca and the University of Oxford. We're going to actually hear from one of the senior execs over at AstraZeneca about their vaccine developments. We'll get to that in just a moment. Right now, though, let's get back to your top business stories and to Charlie Pellet.
Hi, thank you very much. Right to the numbers. Give you the story in a moment. The S&P up 11 now, up by 0.3%. The Dow up 260 points, up 0.9%, bringing its year-to-date gain now to 3.45%. NASDAQ is up 8 points, a gain of less than 0.1%, up 32 points. The NASDAQ 100 index now down by 0.2%. 10 years down 9/32, 10-year yield 0.85%. Gold down 1.8%. 18.37 the ounce in West Texas. Intermediate crude up 1.4%. 43.02 a barrel on WTI. Stocks are pushing higher as investors pile into companies that will benefit most from a return to normal economic activity. Technology shares lagging behind. Gold, as I mentioned, is slumping. A COVID-19 vaccine developed by the University of Oxford and AstraZeneca prevented a majority of people from getting the disease in a large trial. Another promising development in the quest to end the pandemic, and the rollout could begin next month. An early analysis of the data show the vaccine stopped an average of 70% of participants from falling ill. The effectiveness rose to 90% for one of two regimens, using half a dose followed by a full one later, close to the high bar set by Pfizer and Moderna. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
We're in a much, much better place than we were 3 weeks ago because we have evidence released that gives us hope that we have 3 vaccines against this terrible illness. You know, now the process is for that data to be shared publicly, for the regulatory authorities to look at it in the United States. There will be independent reviewers coming in, independent advisors who will help the agency sort through it. And I think each step will give us, hopefully, more confidence in the results.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. AstraZeneca shares, they are lower today, down by 1.9%. Pfizer last week, lower by 1%. Moderna the week before that, up now by 3.7%. Again, recapping, equities higher with the S&P up 13, up by 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And it is all about the vaccine companies right now. And as we mentioned earlier, Charlie just talking about it. Today, it's all about AstraZeneca and the University of Oxford. If you recall, they were the subject of a cover story at Business Week back in July. The COVID-19 vaccine developed by the University of Oxford and AstraZeneca, really preventing a majority of people from getting the disease in a large trial. and really another promising development in the quest to end the pandemic. Our Bloomberg TV team, Alex Steele and Guy Johnson, they caught up earlier with Rod Dauber, the executive VP over at AstraZeneca. They talked about the data on that vaccine, and here's what they had to say.
We're also surprised to see the data over the weekend coming in. And you can imagine that the scientists of Oxford, as well as our own scientists, are now looking into it, what can cause it. There are theories that you're priming the immune system with a relatively low dose, and then if you give the full boost dose 1 month later, that will be more effective. But this is clearly one of the elements the scientists and the clinical developers still need to sort out.
So then, do you not know? I mean, is that what my takeaway is? Because some of the criticism is that you guys are just highlighting the really good data, but we don't actually know what that 90% efficacy rate was part of. There were fewer people in that study. We want to know more about them, and you don't seem to have it. What's going on there?
I think it's the most important piece is, irrespective of the dosing, if you get vaccinated, it's clear that the vaccine is safe and has an effectiveness of 100%, irrespective of the dosing. So that's incredibly important to remember. And of course, we will have that discussion with the FDA as well. And then we have to say it's still speculation about what can cause the high efficacy in this low dose and high dose regimen. It's exciting, but we simply don't know what is driving it exactly, and be assured that our scientists and clinical developers will do everything to give an answer on that sooner than later.
You talked about the FDA there, so let's just talk about what is happening in the United States. The current regime that's being tested in the United States is not the more effective one. It's not the half full. Are you going to switch the trial in the US to the half full? And does that mean starting a whole new trial, or can you do that kind of midway through the trial that you're currently running?
Yeah, that's an excellent question. First of all, in the course of this week, we will discuss the data with regulatory agencies across the world, in the UK, in Europe, but certainly also with the FDA in the United States. And based on that feedback, we will adjust our clinical trial if the FDA is agreeing with our approach. We still need to remember that the trial in the United States is still running. It's a very large trial. We're trying to get more than 30,000 participants in that trial. As we speak, we have now roughly 11,000 participants in the trial. So if we need to include an extra arm in that trial, we still have more than enough time to do that.
As I'm sure you're aware, Ruud, one of the analysts over at Leerink had really critical things to say about the trial. One of them is that, look, it's never going to get approved in the U.S. They said in the note that you tried to embellish their results by highlighting a reported 90% efficacy in a relatively small subset of subjects. The suggestion by the investors that the small sample given the lower priming dose was evidence of superior efficacy only brings to discredit the program. We regard the data disclosure as premature and insufficient, and like I mentioned, goes on to say it's never going to get approval in the U.S. What's your response?
I think those comments are quite harsh. We need to realize that the study has been executed by top scientists from Oxford as well as AstraZeneca. We will publish later in the week the full data set. So they are working around the clock in order to give full visibility about the different cohorts we have studied. And I think it's far too early to speculate about how regulators will react on that. Certainly the FDA, once again, in the United States, we are running a very special trial with more than 30,000 participants. So let's be a bit more patient and see how the FDA will react before making such harsh statements.
And that was Ruud Dauber, AstraZeneca Executive Vice President, catching up with our Bloomberg team over on the TV side, Alex Steele and Guy Johnson. Certainly some controversy and some questions about the research that they have done. AstraZeneca shares, I think Charlie mentioned this earlier, the ADRs that trade in the United States, they're down 1.8% today. So we're not necessarily seeing some of the investor enthusiasm that we've seen with some of the other companies, whether it's Pfizer or Moderna, when it came to some vaccine news. So check out more of that interview. Just go to the Bloomberg Bloomberg or Bloomberg.com. Right now, though, it's time for another check on world and national news. For that, let's head over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The U.S. economy may be growing after its sharp contraction, but the World Bank's chief economist cautions the rate of growth is inadequate to avert permanent damage to the economy.
At the current rate, it could take years for full recovery, Carmen Reinhart said in a Bloomberg interview.
We see a snapback. We see growth rates come back simply because the declines were so sharp earlier in the year. But that is rebound. Recovery is when you're at least as well off as you were before. These kinds of events leave lasting consequences.
And that includes more damaging business failures and permanent setbacks for too many workers, Reinhart said, unless the government steps in with sufficient targeted aid to enable a faster recovery. In Washington, Irv Chapman, Bloomberg Radio.
President-elect Joe Biden is expected to name veteran State Department official Tony Blinken as his Secretary of State and former Secretary of State John Kerry to lead the fight against climate change. Former President Obama spoke with the Washington Post and says he likes what he's seeing.
There's been some damage done that is going to take some time to dig ourselves out of. But there's no doubt that Joe's got the right people to do it. And I have every confidence they'll be able to do it. It just may not happen instantaneously.
The head of the General Services Administration is bucking demands from House Democrats for an in-person briefing to explain her blocking of transition resources for Biden. Instead, the agency is offering a 30-minute briefing next Monday with the deputy administrator. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Masser, and our top story at this hour, President-elect Joe Biden planning to nominate former Fed Chair Janet Yellen to serve as his Treasury Secretary. It would make it the first woman and a seasoned central banker, putting her into the nation's top economic policy job. This is according to folks in the know. We're going to be all over that in just a moment. Let's get back to your top business stories and to Charlie Pellet. Charlie, it's a big deal.
Indeed it is, Carol. Wall Street likes the news with the Dow, the S&P, NASDAQ all advancing right now. The Dow, by the way, 29,600, up 336 points now, up 1.1%. The S&P's up 22 points, up by 0.6%. NASDAQ reversing earlier losses, up now by 40, a gain of 0.3%. The NASDAQ 100 index, which had traded lower for much of the day, up now by 0.1%. So stocks pushing higher as investors pile into companies that will benefit most from a return to normal economic activity. 10-year down 10/30 seconds, 10-year yield 0.85%. Gold is down 1.7%, 18.39 the ounce. West Texas Intermediate crude up 1.3%, $42.99 a barrel on WTI. A COVID-19 vaccine developed by the University of Oxford and AstraZeneca prevented a majority of people from getting the disease in a large trial. Another promising development in the quest to end the pandemic, and the rollout could begin next month. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
It's great to hear from the companies, the top line results, but there are a lot of other results and data that have to be shared. We want to know how well the vaccine works in different populations, particularly in older people. We want to understand the safety profile so people can really expect the side effects, modest side effects that might happen. And we want to understand, the key elements of how to keep the vaccine active during the transport cycles.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares, they are lower on the news, down 1.3%, talking specifically about the ADRs traded here in the United States. Actually, AstraZeneca is down 1.3% with the ADRs there. Pfizer is down 0.8%, 36.39, and Moderna shares, they're up now by 3.2%. So again, recapping, equities higher, S&P up 21, up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. As Charlie mentioned, our top story at this hour, President-elect Joe Biden planning to nominate former Federal Reserve Chair Janet Yellen to serve as his Treasury Secretary. It's a move that would put the first woman and a seasoned central banker into the nation's top economic policy job. Again, this is said to be true, according to those familiar with the matter. Let's bring in our Bloomberg Intelligence senior U.S. economist, Yelena Shaletyeva. She joins us on the phone from Long Island. Hey, Yelena, this name was floated about last week. We were all kind of talking about it and reporting it, but it looks like it's more likely now. What does a Janet Yellen bring to the position of Treasury Secretary, and especially at this particular time?
She brings a lot of experience, a lot of crisis time experience. So she was at the helm of the Fed during the last expansion, and she also brings a lot of expertise in terms of the labor market economics. So her research has been always focused on the labor market, how this is working, how the labor market should be, labor market indicators should be targeted in terms of policy. And I think that will be very helpful for the economy going forward.
How would it be different from a Jay Powell Fed?
For her, well,
yeah,
it's a slightly different job description, obviously. So that will be a lot. There will be a lot of focus on the fiscal policy. But again, I think she will focus on the fiscal policy in terms of how it can help the labor market at the time of the recovery. So she knows this inside and out. And I would just say that if confirmed by the Senate, Janet Yellen and Jerome Powell at the head of the Fed would make it an optimal pair to lead the economy out of the crisis. So that I really applaud the pick.
Yeah, and forgive me, I misspoke. I'm like, confusing my positions here. But she would be a very different Treasury Secretary from Steven Mnuchin.
Well, at the time of the crisis, it's really about how to pull all the forces together, work as a team, and really try to help the economy. I would say that Steven Mnuchin and Jay Powell worked really well as a team at the height of the crisis as it was unfolding in the spring. So, there was some recent disagreement about the fate of the lending programs, but I think it really worked well as a team in the beginning of the crisis. And I think it would be a great team again if Jay Powell gets renominated and Janet Yellen is confirmed as the Treasury Secretary.
Well, and I guess what I was thinking, and like I said, forgive me, I was kind of mixing my Feds and my Treasury Secretaries, but I think what's important, Yelena, is that this is somebody, Janet Yellen, someone who understands how the Fed works, right? And the Fed and the Treasury Secretary often work, as we've seen, certainly during this pandemic crisis, have to work closely in hand, right? Because there's different tools that each of them can employ, but, it's all about making sure the economy can keep moving as well as it can or doesn't fall apart, more than it needs to. And I do wonder about, her having this knowledge of how the Fed works, how that will be an advantage during this time.
Again, she brings a lot of experience, a lot of knowledge from all different aspects of policy making, and she would just use this knowledge in her new position. Look, the teamwork during the crisis time was very important during the financial crisis. We saw that back in 2009, and the combined response from fiscal and monetary policy authorities, eventually brought us out of the crisis.
Right.
We saw that again this time around in the spring, and we will definitely need this teamwork going forward as we really get through the recovery.
One thing I want to ask you, got about 40, 50 seconds here. What's also key is she's got to, deal with, and what will be a challenge is the logjam that we have on Capitol Hill to deliver economic relief to those long and growing unemployment lines. Does she have the respect, and do you think she'll be able to work her way through Congress? And just got about 30 seconds here.
I think she has all the respect from different, sides of the aisle, and she proved that very much during her tenure at the Fed.
All right. Well, certainly living in interesting times. Just quickly, Yelena, does this seem like the right type of Treasury Secretary for the world that we're in right now?
Well, I think yes, absolutely. I think she just has a lot of experience and knowledge, and she would just be the right fit for the job.
Yeah, she's definitely, as we said earlier, Charlie and I were talking about it, Charlie Pellet, she certainly has seen the world and the economy from a lot of different perspectives, so brings kind of a rich base of knowledge to the position, or would certainly. All right, Yelena, thank you so much. Bloomberg Intelligence senior U.S. economist Yelena Shaletyeva. All right, let's get back over to world and national news, back on over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Well, as you've been discussing, President-elect Joe Biden apparently plans to make history and nominate former Federal Reserve Chairwoman Janet Yellen to become the next Treasury Secretary. Yellen, an economist at the forefront of policymaking for 3 decades, would be the first woman to hold that job. The Michigan Board of State Canvassers is meeting to certify the state's presidential election results. The 4 members, 2 from each party, are hearing from a variety of people before casting their votes. One speaker, Michelle Anzaldi, is a clerk from the state's Pittsfield Charter Township.
I respectfully ask, as a clerk and as a voter in Michigan, that you certify the result so that the voters in the state of Michigan are not disenfranchised.
In Pennsylvania, President Trump's campaign is asking a federal appeals court for an emergency injunction, blocking that state from certifying its election result. Public health experts are pleading with folks not to travel for the Thanksgiving holiday, but airports are busier than ever.
More than 1 million people passed through airport security yesterday, 1,047,934 to be exact. Since Friday, the Transportation Security Administration says more than 3 million Americans have taken to the skies. That's the most since travel demand nosedived at the start of the pandemic in mid-March. At the same time, airlines like American, United, and Southwest are reporting a rise in cancellations. Overall passenger totals are still about 45% what they were this time a year ago. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. All right, so at this hour, our most read story on the Bloomberg has to do with Janet Yellen being Joe Biden, the president-elect's pick for Treasury Secretary. So go just a few down to number 7, and this is your most read story on the Bloomberg today, and it's about Steve Cohen. You know him well-known in the hedge fund community, SAC Capital Advisors. It was like a money-printing fiefdom, and we've talked about it. We've reported about it. Well, the biggest news as of late, Charlie, was that he bought the Mets.
Indeed, and I love the way our Brandon Kutchkov wrote the story. And I just got to read the first paragraph here. Stephen A. Cohen captured the hearts of New York Mets fans at hello, as in hello, I've got $10 billion. So years of penny pinching at the Mets, and with that kind of a checkbook, Mets fans absolutely delirious, absolutely enthusiastic about what potential changes may be coming their way.
Well, it hasn't been easy to be a Met fan. We know that. We know that big time. So he, Cohen that is, has kind of transformed himself into something of a Ask Me Anything presence on Twitter, where he quickly accumulated more than 85,000 followers, is affectionately referred to by delirious Mets fans as Uncle Steve. And you got to remember, those Bloomberg listeners, you know this. Steve Cohen is not someone who talked a lot. Really reclusive, never spoke to the press, never made public statements or would even have his photo taken. But we knew him as this great hedge fund manager, of course, and has often been said to be the individual behind the character Bobby Axelrod on Billions. But he's definitely kind of become much more warmer and fuzzier here.
Yeah, warmer and fuzzier, though. But as I read the story, the question I had as I started the story, is this going to last? You're in New York, one of the toughest sports town in America.
So true.
And, it may be a very, very, very short honeymoon.
Well, let's see, but we'll take even a little honeymoon, and let's see whether or not, Steve Cohen and his billions, his $10 billion, kind of breathe some new life into the Mets franchise. We will certainly see, and I know Mets fans would certainly like to see a different type of season. All right, Charlie Pellet, it's a great read, as you say, and we'll put this out on Twitter. You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks higher, 13 minutes to go ahead of the closing bell. Big news out of the Biden camp. President-elect Joe Biden plans to nominate former Fed Chair Janet Yellen to serve as his Treasury Secretary, a move that would put the first woman and a seasoned central banker into the nation's top economic policy job, this according to sources. Stocks are pushing higher, with the Dow, the S&P, and NASDAQ advancing as investors pile into companies that will benefit the most from a return to normal economic activity. S&P 500 index up 22. That is a gain of 0.6%. The Dow's up 354 points, up 1.2%. NASDAQ is up 31, a gain of 0.3%. 10 years down 9/32, 10-year yield 0.85%. Gold is down 1.8%, 18.37 the ounce. West Texas Intermediate crude up 1.2%, 42.95 a barrel. Recapping, S&P up 22, up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed, everyone. Just about 20 minutes left in today's trading session as I check the clock here. Let's do the drive to the close with Michael Sheldon back with us, Executive Director, Chief Investment Officer over at Hightower RDM Financial, once again joining us from Westport, Connecticut. Michael, good to have you here with us. How are you?
Good, thank you. Happy pre-Thanksgiving.
Thank you, and to you as well. I kidded at the top of our broadcast. It's supposed to be a quiet week. It's a holiday week, but because it's 2020, it's unlike any holiday week that we've known before. A lot of news, virus news, vaccine news, and then we had, of course, crossing the Bloomberg about Janet Yellen, said to be President-elect Joe Biden's plans for Treasury Secretary, according to those in the know. As you start to see the Biden administration start to shape up, what does it say to you, and what kind of environment and what kind of team does it mean for the markets, the economy, in your view?
Well, I think as President-elect Biden builds out his team, I think he has to put together a team of people who's likely to be able to pass both the House and the Senate. So to get approved is the first thing. And then I think he's really a pragmatist. So I think he's likely to put people on his team that have a lot of experience already. And I think if you look at Janet Yellen, she sounds like a good choice. She has an impressive background. She was the former chair of the Federal Reserve for several years. She was head of the San Francisco Fed. She was previously part of the Council of Economic Advisors under Bill Clinton. Mm-hmm. So she definitely knows her way around Washington. And I think the market should welcome the fact that fiscal and monetary policy should be able to coordinate fairly closely, and which should help the economic recovery, at least over the next several quarters, I would think.
Yeah, and listen, this is someone who also prioritizes, as we just heard from our Yelena Shaletova of Bloomberg Intelligence, this is someone who prioritizes the labor market, right? She focuses on it. This is where her work and research has dealt with, and she understands maybe what needs to be done to get a labor market back to more normal.
And she also importantly knows her way around Washington. So that should help her work with policymakers and coordinate again with the Federal Reserve, which outgoing Treasury Secretary Mnuchin seems to maybe have hit a little bit of a stumbling block in his last parting days.
But that's a really good point, Michael. I mean, listen, that's going to be the roadblocks that are Congress, right? Or that is Congress. That's a big deal in terms of trying to get the necessary policies that need to be put into place to help out workers, to help out the economy. We've seen it, as you said, we thought things were going so well, and they were for the first round, right? But it's gotten much more difficult. We need somebody who understands the intricacies and the difficulties that are Congress.
Absolutely. It seems like it's gotten a little more of a contentious, the relationship between the Fed and the Treasury has gotten a little more contentious in recent weeks, but I think it sounds like Janet Yellen sounds like a sensible, solid choice.
Yeah, exactly. Well, what are you going to be looking for specifically when it, as an investor, somebody who watches the markets, what are the types of policies that you think are going to be at least minimally necessary to kind of provide a little bit of a safety net and kind of shore up the economy at this point, which ultimately then, right, shores up the market. I mean, the markets, as we heard at the top of our show with our Gina Martin Adams, they're forward looking and they're getting more optimistic as we see more news about a vaccine. But nonetheless, if the economy starts to come undone again, markets and investors are going to get a little bit nervous.
Yeah, I think the big news over the past few weeks is certainly news about the vaccine. The fact that we have multiple vaccines that will likely be available to the general public over the next maybe 3 to 6 months or maybe a little longer, depending on logistics and distribution, I think that sort of provides a light at the end of the tunnel. And while the number of cases may go up and economic data may get a little bit weaker over the next 2 or 3 months as we head into early 2021, it sounds like, from our perspective, it looks like the economic data should start to improve during the middle of the year. And we could have a pretty solid second half of next year heading into 2022.
So having said that, have you been kind of repositioning at all? Or are you still kind of playing a little bit of a wait and see mode? Might you at this point?
Right. Well, in our traditional models, outside of our income-oriented model, which has a little bit of a different mandate, we really have sort of a barbell approach. We've been overweight growth for much of the past several years, which has worked out pretty well. But now we're basically moving a little bit from growth and basically trying to participate a little bit more in the parts of the market that are likely to perform better as the economy recovers. So we have started to shift a little bit in terms of investments towards parts of the economy that will participate better. But we do have a barbell approach because you do want to be diversified.
Yeah, exactly. Well, what's going to be the trickiest? I want to go back to Janet Yellen just because it is our top story on the Bloomberg. And I just think, as we continue to try and focus and look forward, this is a key part of it. What will be kind of her number one task, or does it need to be, do you think, day one, if she indeed becomes the next Treasury Secretary, as it seems likely?
Well, I think she'll have to work with the Senate. I think early in 2021, it'll be critical for Congress to pass another stimulus package. There are a lot of workers who are going to be losing their unemployment benefits in the next few weeks or so. And so that the economy doesn't run out of gas, so to speak, heading into the winter and early 2021, I think she should work as best she can and coordinate with the Democrats and Republicans to get some sort of fiscal package passed in early 2021. And the government also is actually supposed to run out of money in a few weeks, but that's part of the current administration, not her administration. I think over the first few months, I think the best thing she can do is to work more closely with Fed Chair Powell so that monetary policy and fiscal policy are coordinated on the same page to help the recovery. There used to be a separation between the two of them, but the lines have blurred a little bit. And you can see that in the fact that the Federal Reserve has been buying lots of Treasury bonds and almost financing the U.S. government deficit in recent months. So we'll see sort of how that develops during her administration.
Yeah, and listen, no doubt about it, there's an advantage to being with Jay Powell and saying, listen, I understand your job, I understand your position. Been there, done that, right?
Right. But I think for the markets, the important question is, does the economic recovery, which started this past summer, does it remain on track? And we think it does. And it's also important to think that historically, economic expansions don't typically last a number of weeks or months. They last a number of years. So from our perspective, we think the economic outlook, we're likely to see somewhat better GDP, improvement in corporate profits. Employment should continue to gradually improve.
Right.
And this should set the stage for some improvement as we head through next year.
Right, provided we do get these virus cases under control and the economy starts to get back to normal. Michael, thank you so much. Really appreciate your thoughts on the markets, as well as Janet Yellen, that news of her expectations really to be appointed the next Treasury Secretary by President-elect Joe Biden. Michael Sheldon, Executive Director, Chief Investment Officer at Hightower RDM Financial, joining us on the phone from Westport, Connecticut. Just a few minutes left in today's trading day. We're going to count you down to the closing bell on this Monday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There it is, sound of the closing bell at the New York Stock Exchange. And up Monday, folks from Barclays and Pacer ringing that closing bell. Stocks churned higher as investors piled into companies that will benefit most from a return to normal economic activity. Tech shares lag behind. Gold slumped. S&P advanced in afternoon trading, adding to gains on news that Joe Biden will nominate former Fed Chair Janet Yellen to be Treasury Secretary. Michael Sheldon is Chief Investment Officer at Hightower RDM Financial Group. And moments ago, right here on Bloomberg Business Week, he told us he likes the report that Yellen will be the next Treasury Secretary.
She has an impressive background. She was the former chair of the Federal Reserve for several years. She was head of the San Francisco Fed. She was previously part of the Council of Economic Advisors under Bill Clinton. Mm-hmm. So she definitely knows her way around Washington.
Subject to confirmation, of course, by the Senate, but Yellen will be America's first female Treasury Secretary. An update across the board with the Dow, the S&P, and NASDAQ all advancing on optimism about the AstraZeneca vaccine news today. AstraZeneca shares, by the way, down 1.1%, but the S&P up 20, a gain of 0.6%. The Dow up 330 points, up by 1.1%. NASDAQ surged 25 points, up by 0.2%. NASDAQ 100 index, though, had a down day, dropping by half a point, little changed. 10-year down 9/32, 10-year yield 0.85%. Gold up 1.8%, 18.36 the ounce. West Texas Intermediate crude up 1.1%, 42.90 a barrel. A lot of optimism about retailers today. Macy's, for example, surged 15%. Airlines pushed higher on vaccine speculation. UAL up 2.6%. American Airlines Group up 8.2%. Delta up 4.5%. Southwest up by 2.8%. Recapping, S&P up 20, up 0.6. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Shaking all over. Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
All right, everybody, one down in a shortened holiday week, of course. I'm Carol Masser, and let's take a look at some of the kind of bigger, broader picture when it comes to the S&P 500. Joining us, Bloomberg News global macro strategist Vince Signorella, not only the S&P, but the markets overall. So 370 names in the S&P 500 higher today, so definitely more of a risk-on trade. 135 lower, 1 unchanged. And if I bring up the major industry groups in the S&P 500, let me just pull it up on my Bloomberg for today. There are 11 major industry groups, and we had 7 of them higher. Top of the pack, energy, up more than 7% in today's trade. Bottom of the pack, real estate, just down about a hair. So, Vince Signorella, happy Monday. A lot going on. So what do you guys, I'm just curious, as you are, blogging away there, I'm just wondering, is it all about Yellen right now?
This latest move, it was all about Yellen. I mean, markets like it. I mean, with all due respect to Senator Elizabeth Warren, they were very concerned that she would be appointed at some point Treasury Secretary. Yellen is a known quantity. As your previous guest had said, she's former chair of the Fed. She's a former labor economist, which means that she, like in the same camp where Powell is in terms of leaving rates lower for longer, she's more likely than not to push for larger stimulus packages. She rebuked the hawks during her tenure, saying interest rates wouldn't go up, there wouldn't be inflation. She was right. I think she'll be able to say something similar now, and try to push projects. Hopefully that'll create jobs and be good for the economy and overall good for company earnings.
So, Vince,
I think we're higher here.
Yeah. So what do you think is like the advantage of having someone, I mean, somebody said to me, she ticks so many different boxes, right? And, here's somebody who understands very closely how the Fed works, having been Fed chair. She understands academia. She's focused on the labor market. She's been at the White House, right, as, the White House Council of Economic Advisors. Like, she understands so many different moving parts here. How does that just give her, so many leg ups, do you think, in terms of figuring out what we need in terms of policies?
Yeah, I think chiefly she would be seen as a unifier. Like, as I said, people know her. She's been able to mold the Fed in the direction that she wanted to take it. I could see her trying to do the same thing with Congress and the Senate. I mean, traders call her Grandma Dynamite. You know, they love her.
Do they really?
Yeah, she's like this quiet little unassuming grandma look, but with, you know, pack the dynamite and get things done. So they totally love her approach to markets. You know, that said, you have to still take everything with a grain of salt. We still don't know how the Senate's going to play out, whether or not it will get the blue wave or it'll be Republican, which could stand in the way of any proposals that the Biden administration has. And I hate to keep harping on it, but we still need to get through Thanksgiving. See if New York City shuts down next week, or New York State, I should say, which by default is a city, and see what people are doing. I mean, I know people personally who are totally disregarding this 10-person thing and, you know, planning a big gathering, and no one listening from Cuomo. Please do not call me.
Well,
I can't rat them out.
No, but you're so right. I mean, we talked earlier about our bite of the day was more than 1 million people flying through U.S. airports on Friday. I mean, we're talking about numbers we haven't seen in a while. We saw it after the Canadian Thanksgiving in terms of, you know, a boost in the cases. And we know that it doesn't take much for those cases to become hospitalizations. And all of a sudden we're stressed out in terms of our systems.
Yeah, and the other thing I would point out, I mean, I did a blog post. I don't know if they published this just yet, but we keep we're seeing sort of the law of diminishing returns take place through markets when it comes to virus announcements. On the Pfizer announcement from the Friday close to the Monday open, there was a gap of 79 points higher than the S&P. This morning, the S&P gapped 10 points higher. And without the Yellen announcement, I'm not sure where we would have traded this afternoon. So, you know, the efficacy of the vaccines is still not proven, and the market seems to be kind of almost, you know, we're there yet. We've heard it.
Right.
Show us that it works. Tell us you're going to get it to us in a reasonable period of time, and hopefully not get us so late in the cycle that so many people get sick in the interim.
This is what happens when we all learn how the sausage is made. We understand it takes a while. And even though you see a big headline. Vince Signorella, thank you so much. Bloomberg News global macro strategist Vince Signorella joining us on the phone. You're listening to Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
All right, Dave Wilson, let's get right to it. Let's start with that chart of the day.
Absolutely. You look back at the S&P 500, it fell almost 34% in February and March, and now it's up for the year. Well, that's never happened before, according to Ben Carlson over at Ritholtz Wealth Management, Barry Ritholtz's firm. He took a look at sort of annual performance of the S&P 500 last week, and this idea of what they call a drawdown. So in other words, you're following from top to bottom, right? There's never been a decline that steep, you know, within a year that, you know, the S&P 500 has managed to come back from and post a gain for the year. You look back at 1987, 33.5%. And it did close higher that year, especially when you look at total returns as Carlson did. So we may be looking at, yes, an unprecedented performance in 2020. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
And to your stock of the day, True Blue, TBI.
Absolutely. It's a staffing company that focuses on providing blue-collar laborers, as the name implies. Founded in 1985, went public in 1994. This year, I mean, the stock really took a hit in February. People didn't like their fourth quarter results. It's been coming back since then. Today, it reached a 9-month high after BMO Capital Markets took a more positive view of the company and the staffing industry in general. Analyst Jeffrey Silber writing that True Blue is a canary in the coal mine for many people because its business tends to do well early in an economic expansion. Silber raised his rating to outperform from market perform. In response, True Blue climbed almost 11%. You also saw gains in cross-country healthcare, Manpower Group, and Robert Half. All those stocks raised at BMO as well.
Very interesting. True Blue still down about 18% this year. All right, Dave Wilson, you are a champ, squeezing all of that in. Thank you so much, especially on that Yellen news. We really appreciate it. All right, you are listening to Bloomberg Business Week. Let's get another check on world and national news. For that, it's over to Mark Mills. Hey, Mark.
Hello, Carol. Thank you. As we've been reporting, President-elect Joe Biden plans to nominate former Federal Reserve Chair Janet Yellen to serve as his Treasury Secretary, a move that would put the first woman and a seasoned central banker into the nation's top economic policy job. Biden is tapping Obama administration veterans for top national security positions, signaling a shift from the Trump administration's America First policies that disparaged international alliances. Among the appointments, Biden's longtime advisor, Antony Blinken, as Secretary of State, and Avril Haines, former Deputy Director of the CIA, to be nominated as Director of National Intelligence. President Obama says the new national security team has a big job ahead.
There's been some damage done that is going to take some time to dig ourselves out of. But there's no doubt that Joe's got the right people to do it. And I have every confidence they'll be able to do it. It just may not happen instantaneously.
About 1 million Americans a day packed airports and planes over the weekend, even as the coronavirus deaths surged across the U.S., and public health experts begged people to stay home and avoid a big Thanksgiving gathering. New York Governor Andrew Cuomo says the mix of high levels of COVID and holiday travel make for a big threat.
You put that rate of increase together with an additional increase from the high level of social activity, that is a dangerous situation.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark Mills, thank you so much. You're listening to Bloomberg Business Week. Carol Master joining me right now once again is Charlie Pellet. Hey, just listening to Cuomo, Governor Andrew Cuomo, he's going to receive an international Emmy for, quote, masterful COVID-19 briefings?
I did.
Is that wild?
I heard that. I laughed, and, what can I tell you?
Why did you laugh?
No, but it's just the fact that throughout this crisis, he has been one of the people that we have seen on television so often providing these updates, and, he got a lot of TV time. So, for better or for worse, regardless of how you feel about his message, the industry and people in the industry certainly were noticing all of the time that he spent on television.
Do you know the Academy's president says people around the world tuned in to find out what was going on, and New York tough became a symbol of the determination to fight back. I mean, he became someone that people went to globally to kind of get an idea of the U.S. situation and where we were, because New York was the epicenter.
Indeed. Now, moments ago, you heard the governor talking about his concern of all of the people coming in, all of the people traveling, potentially coming to New York. And one of the big issues is, how do you differentiate who might have gotten a vaccine and who did not get a vaccine? And how do you prove it when you need to travel? And that's where IATA stands. That's the global airline lobby.
Yeah, listen, this is kind of interesting. A test program is going to begin with British Airways parent IAG this year before arriving on Apple devices in the first quarter and Android from April. IAT said travelers will be able to share their status regarding the virus with border authorities or present a QR code for scanning. We're talking about basically a COVID passport.
Exactly, and it's the reverse of when you come back into a country, you got to show your passport or do it all electronically. But as you check in for your flight, or as you perhaps maybe not as you go through TSA security, but certainly that's one of the easy things there. Scan the passport. Is Pellet good to go? Yes or no? If no, you break his heart. If the answer is yes, you send him on his way.
But what do you think? I think maybe this is what we're going to have to what we need for in terms of safety and transparency to get.
I love it. I love it. I love it. I love it. That's just my opinion. I want to know the person I'm sitting next to is safe.
Here. I'm with you, Charlie Pellet. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Update on Wall Street with the Dow, the S&P, and NASDAQ all advancing. Gold, though, was down 1.9% today. The precious metal dropped $34.91. Gold at $18.36. 10-year down 9/30 seconds. 10-year yield 0.85%. S&P up 20, up 0.6%. The Dow advanced 327, up 1.1%. NASDAQ up 25. That was a gain of 0.2%. Again, gold down 1.9%, down almost $35 the ounce. Spot gold at $18.36. Crude West Texas Intermediate did trade above $43 a barrel, up 1.1%, now $42.88. So the rotation trade underway again today on Wall Street. The Dow, the S&P, and NASDAQ all advancing. Stocks also gained after President-elect Joe Biden said he will nominate former Federal Reserve Chair Janet Yellen to be Treasury Secretary. After the bell, moments ago, we heard from Agilent. It forecast adjusted EPS for the first quarter, and its guidance missed the average analyst estimate. Shares of Allegiant, they are trading lower after hours. Allegiant is down right now by just about 3.3%. Again, recapping, the equities push higher. The Dow, the S&P, and NASDAQ all gaining. S&P up 20, up by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Really appreciate it. Well, this definitely caught my attention when I was reading in this morning. It's about a story by Nick Wadhams, actually. And it kicks off saying, by the time Secretary of State Michael Pompeo was wrapping up a 10-day swing through Europe and the Middle East, he had angered Turkey's leaders, infuriated the Palestinians, and befuddled the French up the global pot when it comes to U.S. relations. So what exactly is Mike Pompeo up to, and does it include the road to the White House? Lucky for us, we have Bloomberg News National Security Team Leader Bill Ferries. He joins us on the phone in Washington, D.C. Bill, I'm so glad you could check in with us about this story. What is Mike Pompeo up to, and what was that trip all about?
Thanks for having me. It was a particularly unusual trip for a Secretary of State, particularly coming as we have this controversy in the U.S. about the transition. He did not spend a lot of time meeting with government officials, especially on the first half of this trip. He spent a lot more time either in private meetings that weren't open to the press or meeting with religious officials, and in some cases doing so in a way that kind of angered local government. So to give you an example, he went to Turkey and flew to Istanbul and met with some religious leaders there, which is not unusual for a Secretary of State. But he basically cited schedule differences and not being able to meet any government ministers. And the Turkish side said that he wanted the government ministers to fly to him in Istanbul rather than him go to Ankara. So it was for the top U.S. diplomat. It was an unusually undiplomatic approach to foreign policy.
So what's he up to?
It's the question I think a lot of us are asking. 10 days abroad is a long trip for this Secretary of State. There's a lot of speculation that he was basically laying the groundwork for his 2024 run. He made a run for the presidency. Yeah. He made a point of visiting a West Bank winery in the Middle East that is kind of known for backing, whose owners are known for backing Republican candidates, and who had a red wine named after Mike Pompeo. These are just the kind of things that you don't typically see secretaries of state doing when they tend to try to be a little bit more nonpartisan, particularly abroad.
And listen, I know this is your guys' world. I mean, I didn't even realize, and I'm not sure how much of our audience had realized, that Mike Pompeo was considering maybe a run come 2024.
Right. Earlier, let's say, I guess it was about a year ago now, there was a lot of speculation that he was going to run for an open Senate seat in Kansas. And he had made a little secret kind of behind the scenes that it was something he was interested in. Mitch McConnell had spoken to him about running for the seat that was going to be opened by retiring Senator Pat Roberts. And he eventually declined to do that. But he is a politically ambitious, fast rising star, I think, in the Republican Party. I mean, just a few years ago, this guy was a pretty low-ranked Republican in the House of Representatives. He's since been the CIA director. He's been the Secretary of State. He has proven himself to be one of the very few people who doesn't draw the wrath of President Trump.
Yeah, it's pretty remarkable. Well, and I also wonder, Bill, how does the rest of the world maybe see Pompeo at this point, and understanding that a transition is expected to happen come January? How do they see these meetings at this point? I mean, what's typical in a typical transition year versus the 2020 transition year?
Well, it's not super unusual for a Secretary of State to continue working, going abroad and meeting with foreign leaders. It's just not, it doesn't, during a transition, it doesn't, usually we don't have this kind of a transition taking place. So you have a situation where the French President, Emmanuel Macron, made a point of saying that if his ministers, or when his ministers meet with Pompeo, they will be fully transparent with the Biden transition team. So they said anything that we say in our meetings with Mike Pompeo, we will be willing to provide that to the Biden team, because Emmanuel Macron was one of the first people to congratulate Biden on the election earlier this month. So it put some of these leaders in an awkward position, and they all meet with Pompeo knowing that in many key areas the policy is going to change pretty sharply once President Biden takes office in late January.
So is there anything else on his docket, or is he done now in terms of traveling?
We rarely get very much of a heads up on Secretary Pompeo's travel. So he has never spent, if you think there's 2 months before Inauguration Day, he has never spent that long in the U.S. So I do think he will travel again. We just don't know where that will be.
So it's just another thing that's kind of been an interesting and unusual year, or contributing to.
Yeah, one like we've never seen.
All right, good stuff. Hey, listen, Bill, I really appreciate your time and just setting the stage, just kind of giving us some clarification about those stories. So thank you so much. Bloomberg News National Security Team Leader Bill Ferry is joining us on the phone in Washington, D.C., and you can check it out just by going to Bloomberg.com, Bloomberg Terminal as well, in terms of what our Secretary of State has been up to. Just kind of interesting for some perspective. All right, coming up, we're going to dig a little bit deeper into politics. Specifically, we talked about Janet Yellen expected to be Treasury Secretary. We're going to dig a little bit deeper into the upcoming president-elect, his cabinet, and his senior advisors. So we'll get into that in just a moment. For those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in DC, Sound On with Kevin Cirilli is coming up next. I'm Carol Masser. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Massa right here on Bloomberg Radio. So we talked a little bit about what Mike Pompeo is up to. That's the current administration. Now we're going to talk about what the future administration looks like. We'll get into that. Joe Biden and his cabinet and senior advisors. We'll do that in just a moment. First up, though, back to your top business stories, and let's do that with Charlie Pellet.
Thank you very much. And certainly big news from the Biden campaign today. The president-elect saying he will nominate former Fed Chair Janet Yellen to be Treasury Secretary. Stocks climbed as investors piled into companies that will benefit the most from a return to normal economic activity. Technology shares lagged behind. Gold slumped right to the numbers today. Got to begin with gold. Gold was lower today, down 1.8%, $34.45 a barrel. Gold at an ounce, gold at $18.36. The 10-year down 9/30 seconds. 10-year yield there 0.85%. S&P up 20, a gain of 0.6%. The Dow up 327, up 1.1%. NASDAQ up 25. That was a gain of 0.2%. Gold, again worth mentioning, down $34 the ounce, down 1.8%. 18.36. WTI up 1.1%. $42.91 a barrel on WTI. After the bell, Agilent forecast adjusted EPS for the first quarter, and the guidance missed the average analyst estimate. It sees first quarter adjusted EPS in the range of 85 to 88 cents. Estimates have been for 89 cents. Agilent, by the way, raising its quarterly dividend 7.8% to 19.4 cents a share. Alaska Air Group plans to trade in 10 Airbus A320 planes for 13 of Boeing's 737 MAX aircraft, providing a vote of confidence for the embattled jetliner less than a week after federal regulators lifted a 20-month grounding. Today, we did see shares of Boeing advance almost 6% today. Airlines higher across the board. Alaska, no exception, up today by 4.2%. So an update on Wall Street with the Dow, the S&P, and NASDAQ all advancing. What about the economic outlook? Michael Kushma is Chief Investment Officer for Global Fixed Income at Morgan Stanley Investment Management.
That we should see U.S. data maybe getting a little worse into December, into early next year, which does put a jeopardy Q1 growth next year. I'm not sure it'll go negative, but certainly decelerating into Q1.
An update for a lot of the retailers. Macy's surged 15.03%. We'll round that off to 15%. Kohl's up 9%. Target up by 3%. A lot of optimism today about what a vaccine could mean for the retail group. Again, recapping equities higher. S&P up 20, up by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. So we are increasingly hearing more about President-elect Joe Biden's cabinet, his senior advisors, and that included, of course, the news of Janet Yellen, former Fed chair, as Treasury Secretary, according to those in the know. So let's kind of lay it out for you. Let's bring out that whiteboard, at least virtually. Bloomberg News national political reporter Tyler Pager joining us once again on the phone from Washington, D.C. You've had a busy day, huh?
Yeah, quite a busy 24 hours. I'd say it's been quite a busy 19 months covering Joe Biden. But yes, quite a whirlwind of news coming out today about, what Joe Biden's cabinet is going to look like.
So let's talk about Yellen, first of all. It seems to be this is someone who ticks a lot of boxes when it comes to maybe what financial markets need, what the economy needs, what the labor market needs, and maybe what Washington needs in order to get maybe the next round of stimulus and aid to keep our economy back on track here.
Yeah, Biden kind of teased out this pick last week, saying that he had made his decision on Treasury Secretary, and it would be someone that would appeal to all wings of the Democratic Party. And then it kind of became clear that Yellen was the front runner for that position. She's someone that will likely find support among Wall Street, but also progressives, and kind of bridges that gap. She's also obviously incredibly experienced Washington hand, knowing the ins and outs of policy and Washington and navigating that environment. And obviously she has, with the rest of the Biden administration, immense challenges coming into the White House and in Washington in January with, the need for stimulus and efforts to reboot and revive the economy as they look to get the virus under control.
Hey, Pedro, hang on. Tyler, rather, hang on for a second. I just want to mention a headline. Michigan certifying the election results showing a Joe Biden victory. We were expecting to hear from Michigan. I think we're also expecting to hear potentially from Pennsylvania today in terms of certifying the election count. So, again, it's just a reminder that the president and his legal team, they keep losing cases, and we are increasingly kind of crossing off the list any obstacles in the way of Joe Biden and his team. And the cabinet that you're laying out for us taking over come January. So what else is kind of key in terms of some of the developments that we're hearing about a Joe Biden cabinet?
Yeah, so we broke the news last night that Joe Biden would be selecting Tony Blinken to be his Secretary of State. And then they rolled out a whole national security slate today. Jake Sullivan will be his national security advisor. John Kerry filling a new role of special climate envoy. Avril Haines, the director of national intelligence. Linda Thomas Greenfield as ambassador to the UN. And I think what these appointments show, and Yellen as well, is this desire to return to stability and very highly qualified, long-time Washington policymakers coming back into the fold. Trump, took a very different approach to filling cabinet slots and top administration postings. Biden is taking a very distinctly different approach than the president did 4 years ago.
So, Tyler, in terms of getting these people through the Senate confirmation process, do most of them seem like pretty easy?
Yeah, I think that's the big question. It depends on what happens in Georgia, whether or not the Democrats win those two seats and effectively have the majority at a 50-50 tie with Vice President Kamala Harris breaking it. And so, Joe Biden has good relations with a lot of senators after his more than 3 decades serving there, and some of the more moderate Republicans have signaled they're going to give Biden latitude to choose his own cabinet. It seems like people like Yellen and Tony Blinken, who have been confirmed for Senate confirmed positions before, won't be a problem. But there's still a few weeks and months before we actually get to those votes, and so it'll be interesting to see, if any of them cause hiccups in the next few weeks as their names get more attention.
Hey, just quickly, I'm just curious, and I'm going to kind of throw you, just kind of maybe a curve. I don't know, 30 seconds here. Kamala Harris, how much say is she having in these appointments?
So my reporting shows that she is very involved. She's in the virtual rooms or in person, and Joe Biden made very clear that he wanted a partner in governing similar to the partnership he had with Barack Obama. And having known what it's like to be the number 2, I think he's keenly aware of ensuring that she's involved. A lot of these people are longtime Biden loyalists and policy hands, so there's no big surprises here. But my reporting and people who are very involved say she is a key player in these conversations.
All right, good to know. Tyler, thank you so much. I know it's been, as you said, a busy 24 hours, so thank you so much for getting us up to speed in terms of President-elect Joe Biden and his cabinet and senior advisors. That is Bloomberg News national political reporter Tyler Pager on the phone in Washington, D.C. All right, let's stay with world and national news. For that, let's get a little bit more from Mark Mills. Hey, Mark.
Hey, Carol, thanks. Just in the last couple of minutes, we've had a headline on the Bloomberg terminal. Michigan certifies election results showing a Joe Biden victory in Michigan. It's a state that President Trump had targeted to try to stop the count, stop the vote, and reverse the decision or the will of the people in Michigan. President Trump's campaign has asked a federal appeals court for permission to request an emergency injunction blocking Pennsylvania from certifying the election result, while the campaign seeks to revise a lawsuit over mail-in ballots, which had been rejected by a lower court judge. The Trump campaign requested a second recount of the presidential ballots in Georgia, where some Trump backers are angry. Georgia's voting system implementation manager, Gabriel Sterling, described a message he received.
It was my birthday the previous weekend. One person in particular said, this will be the last birthday cake you ever have.
A COVID-19 vaccine developed by the University of Oxford and AstraZeneca prevented a majority of people from getting the disease in a large trial. Another promising development in the quest to end the pandemic. The vaccine stopped an average of 70% of participants from falling ill. On ABC's Good Morning America, Surgeon General Jerome Adams welcomed the news.
I'm just excited that now we have 3 vaccines out there, because when you're trying to immunize the entire planet, we want to have as many different tools in our arsenal as possible.
President-elect Biden has plans to nominate former Federal Reserve Chair Janet Yellen to serve as his Treasury Secretary, according to people familiar with the matter. And former Secretary of State John Kerry will be Biden's climate change envoy. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark, thank you so much. You are listening to Bloomberg Business Week on this Monday. Carol Masser, joined by Charlie Pellet of Bloomberg News. And Charlie, this is a cool story. Looks like it's from our Pursuits team. Kim Bassine writing it along with some other Bloomberg News reporters. And it's talking about kind of the famed shopping streets that you can find around the world, right? We have Park Avenue. You have other areas really well known, whether it's London, Hong Kong, you name it. Bond Street in London specifically. But these streets are getting ready for the holidays, but they're also getting ready for a pretty tough holiday season.
Indeed. Got to mention, too, Oxford Street, Regent Street in London as well, and certainly the Ginza and also the Champs-Élysées in Paris. You know, it is a tough spot for retailers to be in because on the one hand, they want to move merchandise. On the one hand, they want to continue traditions of having absolutely beautiful windows that attract crowds. But on the other hand, you don't want to attract crowds. And if you do attract crowds, it's got to be socially responsible. It's got to make sure that it's COVID compliant. I do not envy the job of retail marketers in this current environment.
Well, and what's really interesting, and I noticed it last week when I was driving in, Christmas decorations, it's not even Thanksgiving, and they're up already. And so we are seeing a lot of retailers kind of putting out the decorations early. It talks about folks are going to be waiting on lines. This is in the UK on Bond Street, that if there are lines to get into stores, employers are going to get ready to serve you some hot chocolate. They're figuring out ways to kind of take care of their customer because they want as many customers to come in.
Yeah, and I'm glad that you mentioned that you thought it was a little early for a lot of the Christmas decorations to go up. I thought it was just me, but, you know, between general merchandise stores, between drug stores, and between some of the high-end stores, yeah, those decorations are up already, and it's not even Thanksgiving.
Yeah, exactly. Check this out, though. In Japan, this year, you know, we're talking about the streets of Ginza. It's one of Tokyo's most well-known shopping districts. They have strict controls on allowing tourists into the country, so just a fraction of their usual shopping traffic has returned to the cities. So buildings there are dark. It's really quiet. Charlie, we know it's going to be a very, very different year.
Absolutely.
You're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks rise, gold drops, call it the reopening rotation. Stocks climbed as investors piled into companies that will benefit most from a return to normal economic activity. The S&P 500 index up 20 points, up 0.6%. The Dow up 327, up 1.1%. NASDAQ up 25, a gain of 0.2%. Gold down 1.8%, 34.20 the ounce at 18.36. 10-year down 10.30 seconds. 10-year yield now 0.85%. West Texas Intermediate crude up 1.1%, 49 cents higher at 42.91 for a barrel of West Texas Intermediate crude. S&P briefly extended gains today on news that Joe Biden will nominate former Fed Chair Janet Yellen to be Treasury Secretary. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, a lot going on. Charlie, thank you so much. So we like checking in with our next guest, especially when it comes to tech developments in one of the most important developing markets. One that you often see where it adapts tech out of necessity and lack of existing systems. We're talking about Africa. Back with us is Jake Bright, a TechCrunch contributor, also author of The Next Africa, An Emerging Continent Becomes a Global Powerhouse. He is with us on the phone from Mamaroneck, New York. Hey, Jake, nice to have you back with us. How are you?
Great to be back. I'm fine. How are you?
Doing okay, you know, just kind of getting by, getting used to kind of our world going into kind of a pullback once again. I do wonder, when you look at the tech world and I look at the emerging markets that are being hit really hard, some of them by the virus, I do wonder how that might impact the adaptation, I should say, or, you know, adapting technology where they really, really need it to kind of be part of the rest of the world. I wonder if you're seeing any kind of slowdown.
Well, if you look at, you know, one of the markets that I follow closely, which, as we know, is Africa, you would say that on the economic side, some of the key hubs have definitely seen a slowdown. And I'm referring to places like Nigeria or Kenya or Ghana or South Africa. But surprisingly, almost inversely to what you'd expect, this African startup sector this year has really taken off in terms of growth and also performance events. You know, some of these events that we've been talking about coming, but, you know, haven't. And they've come this year, and it's a really big wave.
Well, why is that? And tell us about them. Give us some of the highlights. Remind us.
Well, you know, just a quick overview. We've been talking about, you know, the growth in Africa's tech sector for years now, right? Roughly a decade, and you've seen rapid growth in venture capital growth year over year and startup formation. But one of the things you and I have talked about is, you know, the sector's been performance light, right? There haven't really been a lot of big, you know, liquidity events. There was one IPO last year.
Right.
But this year in the fintech sector, which gets the most VC funding, you've seen some really big events, right? So there was Stripe, you know, the big U.S., you know, payments firm purchased this startup out of Nigeria called Paystack for $200 million, which is basically, Paystack is a payment gateway company that helps big companies get payments in and out of Africa. So that was pretty notable. You had Network International, which is a UAE payment services company. They bought this company, DPO, for north of $200 million in July. And then in August, you had World Remit. They acquired this African-focused firm called Sendwave for $500 million. And then last week, this isn't exactly an M&A event, but last week you had a really notable event in that Jeff Bezos, through his personal investment firm, Bezos Expeditions, backed a $30 million Series B to this Pan-African fintech company, Chipper Cash, founded by a Ugandan and a Ghanaian immigrant. So there's been a lot of money and a lot of, you know, M&A activity happening in Africa's fintech sector. And just one last thing, Carol, is these big acquisition events prior to last year are just almost non-existent in this region.
So it's kind of fascinating to go from nothing happening to a lot happening. What happened?
Well, you know, the trick is that these firms I mentioned, and I've Chipper Cash and Paystack, you know, the founders, Sam Saranjogi and Shola Akinlada, I've known these guys for years, right? They called me up when they were early stage startups. They don't disclose financials because they're still private companies.
Right.
But they've seen a lot more payment volume in Africa go to digital structures, and even with the pandemic, and in some cases because of it, some of these economies are still cash is king economies, and there's been you have cases like in Kenya with M-Pesa that's a real light for digital payments adoption. But some of these other markets like Nigeria, cash has remained king, and there's some talk that the pandemic has really shifted consumer preferences in these markets away from cash, because cash is just seen as a dirty way to pay, and you have COVID-19 going on in all these countries too.
Right. So it's interesting, it's funny that you mentioned M-Pesa, and Paga is another one that we have talked about certainly on our air here. M-Pesa has been around for a while. Some of these, all of these systems, Chipper, I mean, some of them, they're not all apples to apples, but I do wonder, as Africa as a whole continues to be part of our global financial system, is it ultimately going to be a bunch of these companies that make it possible, or do you foresee that there's going to be one or two major players?
Boy, I bet that's what these venture capitalists that are starting to focus on the continent are sitting around having conversations about.
It's mine that's going to be the leader, right?
No, there really is a debate, because fintech is the most straightforward and play on the continent, and you can get into a conversation of, is it actually underinvested? Because what you have in Africa is you have, by most statistics, you still have the largest underbanked or unbanked population of people in the world, right?
Right.
And that's 1.2 billion people. So by that play, you could say, wow, there's a lot of room for growth, and the pie has a lot of room for big players. But on the other side, there are thousands of startups moving in or already in fintech. There's only really, if you break it down, there's a handful of markets that are really viable. The ones I mentioned: Nigeria, Kenya, South Africa.
Right.
And there is a conversation about who's going to win, who's going to lose. Is there space for all of these VC-backed fintech startups, which are almost all of them are mobile-based, right?
Right.
Is there space for all of them to do well? And the answer to that is usually probably no, or maybe one does well, or maybe you start to see some cross-acquisitions where some of these VCs or these firms themselves, which are starting their own venture activity, which is exciting, maybe they buy some of their partner or their competitors who aren't doing as well. So that's all the exciting play that you have in this market. And again, Carol, as we talked about, 5-10 years ago, none of this conversation that we're talking about now was happening. It was all very kind of far offish in many ways.
Yeah, I still think I brought it up with you in the past, the 60 Minutes piece on M-Pesa, and I think for everybody it was like, hey, just have a little under a minute left. The Jeff Bezos angle, though, his personal VC fund, as you said, making some, financing round into Chipper Cash. Is it just Jeff Bezos investing in interesting things, or is it Jeff Bezos with a plan for Amazon more broadly? Just quickly.
Well, as you can imagine, Jeff Bezos' people would confirm the story with me, but they wouldn't say much more. One thing I did point out in my coverage was this is Bezos Expeditions, which isn't exactly connected in any way to Amazon. Amazon is more engaged with AWS in Africa.
Right.
They won't go on record on anything, but we can speculate that there's probably not a full disconnect in some ways, but that's, again, just speculation between Jeff Bezos' personal investing and what his company's doing on the continent.
You got to think, Jake, right? He's constantly looking at the world and figuring out, where's the next big, especially growth opportunity, if you think about it. Always great stuff. Jake, thank you so much. Really appreciate it. Jake Bright, he's TechCrunch contributor. Check out his book. It's all about Africa. We talk to him about it all the time. It's called The Next Africa. An emerging continent becomes a global powerhouse. And you can increasingly see, especially when it comes to fintech, investors and VC investors really finding some opportunities. He was joining us on the phone in Mamaroneck, New York. You're listening to Bloomberg Business Week, and we are Bloomberg Radio.